Hi, and welcome back to the Cheeky Crypto podcast. My name's Chris, and I am joined by none other than JB. How are you, JB?
I'm very well, thank you very much. Start of the weekend here, so looking forward to having a nice, relaxing weekend. Yeah. How are you doing, Chris? You good?
Yeah, doing well. And I mean, tomorrow in Milton Keynes for the first Christmas Cheeky Crypto meetup, which should be pretty damn awesome. That is happening in Milton Keynes. So if you want to join us for the meetup, then don't forget to jump in the Discord and fill in the form just to let us know you come in, just so we've got an idea of numbers. So yeah, looking forward to that. And yeah, look, there's loads going on. We've got the partnership with 𝗕𝗘𝗪𝗠𝗠𝗃. We've got the NFT mint with 𝗕𝗘𝗪𝗠𝗃 on the 19th. Again, all details are in the Discord. Lots of pictures of all the different race suits have now been sort of made public, which is fantastic. So yeah, look, loads going on, getting towards the end of the year, and yeah, looking forward to sort of bringing in 2024, which seems really 2023, sorry. Yeah, don't know why I said 2024. Way ahead of myself, but looking forward to bringing in the new year and see what happens, you know, with everything in regards to crypto. But there's an awful lot going on, isn't there, around SBF and the contagion from all of the stuff FTX, I guess.
Yeah, there's a couple of news articles have come out that have been very interesting. We're just learning more and more about this guy, what pockets his hands were in. You know, there is a lot of news coming out. Businesses struggling, where he was investing, which nobody really knew about. So there's a lot to dive into here. I think maybe we start off talking about Sam and FTX, but I think it's most predominantly Sam was secretly funding a news site called The Block, which has now led to the resignation of the CEO, 𝗕𝗘𝗪𝗠𝗃 McCafferty. So obviously, instead of creating his own news platform, he's backed a semi-established platform. Has it been to protect himself? Has it been to pump out news about FTX to maybe help them, or to silence some of the bad news that are coming out around them? Obviously, there's a lot has came out about it. So yeah, we're seeing some more shady moves from SBF.
Well, I mean, what a surprise. But yeah, on that note, I have seen Charles obviously mentioning that obviously, you know, this kind of explains a little bit as to why Cardano has been receiving so much FUD, you know, being called a ghost chain and so forth. So yeah, maybe it's a mixture of a few things, or all things mentioned by yourself. But you know, I think he's resigned, failing to disclose $27 million worth of loans from Alameda Research, which is just mind blowing, right? Like, what on earth? And you know, Nick and myself have mentioned this before, like the amount of corruption, and it's like at many different levels, not just within crypto, but you know, in crypto, you know, where we're operating, we see it like regularly on loads of different levels. And you know, it is surprising, you know, even what's his name, Kevin O'Leary, you know, $15 million you know, he was paid to do the advertising, or be a spokesperson, whatever terminology you think best suits. Let me know in the comments below. You know, that's turned him into this pro crypto, pro Sam character, right? And supporting a fraudster at the end of the day. And yeah, look, money talks, clearly. Like, you know, it just goes to show that you can corrupt a lot of these people. And this is why Nick and myself always say, go do your own research. So important.
Well, yeah, you touched on corruption there, and obviously this is a media site, it's a news site, and they title themselves as they pride themselves on unbiased and independent coverage. How can you be unbiased if you have been funded, let's say it's $40 million here from Alameda Research? How could you then promote unbiased, independent coverage of FTX, of Alameda, if that's who's paying you to put out the news? It's, you know, these things don't add up here.
Yeah, they really don't. And we see so much contagion from all of this now. You know, we saw obviously BlockFi, which was one we also highlighted really early on. So we highlighted FTX before all this stuff kicked off, before 𝗕𝗓 put out his tweets. We also highlighted BlockFi, I think pretty much before anybody. And now we've seen obviously them filed for Chapter 11 bankruptcy. That was done a few days back, and well, it's a few weeks back now, isn't it? But you know, what I would say is, like, I see pockets of people getting very, very comfortable on the exchanges and lending platforms again. And you know, crypto.com have obviously you know, kind of put out this this report saying that, you know, how much they've got asset wise, you know, and they've got more assets than you know, liabilities and all that sort of stuff. But it probably is worth highlighting, because you know, crypto.com are an exchange that I've got on my list of ones to be wary of. And you know, Chris, the CEO, has been involved in multiple ventures that have ended in collapse. I just want to be really like quite clear about all of this, including where suppliers claimed they were unable to access their earnings. You know, just to scratch the surface of that, and I will share that in the Discord for people to read through at their leisure. But you know, I've asked a question in regards to the post that has been put out, where Chris is basically saying that, you know, they've had this audit done, and you know, they've got all of this all of these assets, and you know, they've got more than liabilities. The question I've asked is it liquid? Right? Because this is the important question. You know, you can say that you've got 102% of, you know, liabilities, you know, in assets, but do you have it liquid? Because if you don't, then you may as well say that you have however much you have that is liquid, you know, there. And I'm pretty sure that they're not going to be doing that. So look, it's an interesting one. I'm not suggesting that I'm right. And I hope that, you know, crypto.com is in a good position. But like, let's be quite clear about, you know, the actual real picture here, and you know, the stuff that's being missed out, because Chris did deflect an awful lot of the questions that he was asked in a lot of these interviews. If you go back and watch the interviews and you listen to the question and you listen to the answer that Chris gave, he wasn't answering the question asked on every single occasion. So just be aware of this stuff. There is pockets of deception, in my opinion. You know, but like I say, hopefully I'm wrong, and hopefully the exchange is going to be all right. But I'm always kind of the opinion of better safe than sorry.
So just to touch on obviously what you're talking about there, they came out to say about the proof of assets. Now, I've noticed over the last few days, I've had emails coming through from the likes of KuCoin, Bybit, Coinbase, and it's all kind of the same email they're all sending out, saying we have X amount sitting there as our proof of asset. So you can see all these platforms are coming out to try and settle their users. So obviously, as you said, we're seeing this more and more, that they're coming out to try and settle us, to say we have this amount held up here. But I'd like to tie that back into what we were talking about with regulations. So to the UK, for them to regulate crypto here, they're going to be asking for proof of high liquidity assets. No, this is obviously going to make the market a lot more stable and safer over here. So I think all this is going to tie into itself and help us as the users, the investors, to have more confidence in the space.
Yeah, I agree. I just think that we need to know what's liquid and what's not. Like, I don't think we're going to be in a position where we're going to be told this information, because knowing this information is going to scare a lot of people, because they won't be, in my opinion, 102%, yeah, of liquid assets against what's held. So, you know, and that's what's important. The banks aren't either. Don't get me wrong. The banks don't have 100% of users' funds now, right now, right? So if 100% of people went to a bank and wanted to withdraw all their money, the banks won't be able to cover it. So I don't think we can expect exchanges to, but they need to, you know, perhaps be a little bit more I guess, transparent as to what the real situation is, because you can tell me you've got 102%, and really you haven't got that, right? The banks don't have that, you don't have that. I just think that it's very misleading. But I get why they're trying to do it. They're trying to calm the situation down, but ultimately, not your keys, not your crypto. I kind of would rather people act sensibly and be safe. And yeah, I think the contagion isn't over yet, right? And it's not just going to be crypto companies that are going to be struggling. We've got Genesis, they're still trying to settle down investors and that side of things by telling people they're working on securing the assets or the funds. And really, let's be honest, I don't think they're getting anywhere near where they need to be money wise for the investment required. And how many pension funds and other companies outside of crypto are going to be impacted by everything that's unfolding? It hasn't unfolded yet. All of it hasn't unfolded yet. There are companies that I believe are already insolvent. They're already bankrupt. They're just not being public about it. So we're seeing the SEC call for companies to come forward about crypto investments and earnings and stuff like that. So there's a lot of stuff that's happening in the background that I think we're going to start over the next few weeks to get more of an understanding of how deep this issue from FTX has gone. But we're not there yet, so I don't feel that people should be comfortable yet. My opinion is that we should still be trying to preserve our capital at this stage. I think 4 to 5 months, I think we'll see the Fed pivot, and I think we'll start to see some level of recovery, but we're just not there just yet.
Well, you touched on there about people starting to feel comfortable, and I can list off a few folk right now that will be feeling a bit more comfortable. So obviously we've seen the lawsuit come out, raised obviously off the back of FTX against a lot of high profile celebrities. So we had the likes of Tom Brady, Larry David, Naomi Osaka, and then the basketball team, the Golden State Warriors. They were all summoned, or they were going to be summoned to court over dealings with FTX for promotions, etc. And we're now seeing that case has been dropped. They're no longer being investigated as such. Obviously FTX are, but these high profile celebrities, they're now no longer being investigated for promoting FTX. So again, we're just seeing more fallout of the shithousery that is FTX and SBF. This isn't going away. It's not stopping, and there's just more and more and more coming out about it.
Yeah, and we've seen one of the executives at BlackRock come out and say that we expect most crypto companies to fail. So they're pretty strong words, right? Don't get me wrong, he's probably right in the respect of how many projects there are in the space, how many altcoins there are, over like 21,000 projects. I have to agree that many of those are just garbage.
We are officially bang on 22,000 projects as of recording. Exactly. Wow. 22,000 projects.
So many of those are going to fail, and many of those may have already failed. So yeah, look, you've got to understand we're seeing other exchanges like which one is it? AAX. They've suspended withdrawals. That was back on the 13th of November. There's some in Australia now as well. Look, we expect more and more of this, and I think it's important that we give the message of preserve your capital. I think we're still in that phase. Another 4 months, I think maybe we're more focused on which projects we should be investing in, and start to see that recovery. Not to suggest that it's going to be like one of those really big bounces and we're out of the darkness of the worst bear market I think we're going to see within the crypto history. I do think it'll be a slow sideways / upward sort of movement over a long period of time, just purely because I don't think people are going to have the capital in order to invest. So yeah, look, it could be a long road to the next bull run.
It'll be a long road, but I think it'll be a fun road. I think right now is the time for everybody to learn. I mean, we're learning so much every day, the way the market's moving, how the projects are acting, how they're reacting with all the bad news that comes out, also the good news that is coming out as well. But right now is the time to learn, gather projects, gather coins that you want to get. As Chris said, protect your assets, protect your capital. As we keep reiterating, concentrate on your risk management. Don't leave things on exchanges if they don't need to be there. Store them on wallets, etc. Just to reiterate, look after yourselves in this bear market.
For sure. So any last words before we wrap up, JB?
I had one quick one I wanted to really cover off, and it was another group that's suffering again off the back of FTX, and it's the Amber Group. Now they are Asia's leading excuse me, they're Asia's leading crypto and lending platform. Now they've cut the deal with Chelsea Football Club, which is around the fee of £25 million per season. They display their badge on the sleeve of their jerseys, and they're also eliminating a lot of their staff. So back in September, they released 50% of staff, and they have now just released another 40% of staff. And again, this is all off the back of FTX. They've got a percentage of their funding locked on FTX. So it's just, again, to reiterate that there is still a lot of projects out there that are struggling and are going to continue to struggle.
Yeah, I think, yeah, I'm not surprised. Yeah, there's a few other platforms that I've got concerns over as well in the Discord, so definitely worth checking those out. But yeah, look, there's going to be far more of this, I feel, over the coming weeks and months. So yeah, it's not over just yet. And you know, just be careful out there and be mindful, you know, of the risk that you have. You know, look at what risks you hold, and question whether you need to hold them at all. I think those are kind of my closing words for today's podcast. But yeah, thanks for watching. Really appreciate you taking the time out of your day to spend that time with us. Mash up that like button, subscribe if you haven't subscribed already, tapping that bell, selecting all the notifications so you never miss a video. And you know what? We'll both catch you in the next one. Take care.